Okay, I want you to know right up front, this is going to be a long video. This is a guide for first-time home buyers, but really it's a more exhaustive look at buying a house with a mortgage. That's what we're doing, and I'm walking through a ton of slides that I have made over the years and just trying to remember everything. I'm going to remake this video over the coming days and weeks and months and try to make it go in a better order. But for now, I just wanted to get this information out there. I've got one customer that really needs to just kind of see this information, and so I'm making this video for this customer. Let's talk a little bit about the process of buying a mortgage, of buying a house. The first thing and the best thing I think to do is to sit down with a mortgage lender like myself and do a homeowner strategy meeting where we talk about your debt, your income, your goals, your future goals, your family, your job, how long you plan on being on your job, how long you plan on living in the next house, where you plan to live in the coming days and years, how long you expect to live in the next house. And then we go through a full application and we get pre-approval. Now, I would typically think the best thing to do is to get that application filled out before the homeowner strategy meeting, because it's in that meeting that I'll go through everything in your application and we'll look at your job, your career, your future, and we'll be able to talk. I'll be able to talk more educated about you in that meeting if I've got your application, I've got your credit report in front of me, I've got all of that information. So then we'll get you to pre-approval. Well, technically at the application stage, I'll get you to pre-qualified, but then we'll get you to pre-approval once you've given me all of the documents to back up that pre-qualification. So basically, the first step is you tell me about yourself, your income, your job history, where you've lived, date of birth, social security, stuff like that. And then I'll tell you if you're pre-qualified based on that information. With your social security number and your permission, I'll pull your credit. When I pull your credit, that'll help me know if you are telling me the truth about your credit. And you say, Josh, why are you already doubting if I'm telling you the truth? Well, that's my job. My job is to take information from you, assume you're lying, pull your credit, and then as I pull your credit, I can see if you're, typically, historically been a trustworthy person when it comes to borrowing money. Then I will, again, pretend that you're lying to me and make you prove your income by showing me pay stubs, bank statements, tax returns, W-2s, all of those things that I'll collect. Usually we're going to need 2 years tax returns. Sometimes we can get by with 1 year's tax returns, but if you've got two, if you can provide two, we need two. That'll be the better option. We need your data. We need your driver's license. We need your W-2s. Last 2 years would be best. We need 30 days of your pay stubs. So if you get paid once a month, one pay stub will work. But if you get paid, weekly or bi-weekly, then we'll need 2 or 4 pay stubs, however many that's going to take. We'll also need things like if you already have a house, we'll need a mortgage statement. If you already have some rental property, we'll need your mortgage statements from those rental properties. We'll also need your homeowner's insurance from those rental properties, things like that. Anything that's gonna play an impact in the picture of your personal credit. Once I have all those documents and I confirm that what you told me is true, then we'll have pre-approval. Next thing we'll do is we'll send it to an underwriter and get you Churchill certified. Now that's assuming that you're doing a mortgage with Churchill. I'll tell you about why that's important later, I think, if I remember. Then we'll find you that home. Then we'll make an offer. Your offer will get accepted. At that point was when I'll order an appraisal. The first thing that I charge you for is the mortgage appraisal, or the appraisal for the property that you're buying or refinancing. So that appraisal, the way that works is I order the appraisal through an appraisal management company. So I can't call up my buddy appraiser and say, hey buddy, will you go out and appraise this house for X number of dollars because we want to pay so much for it and we need this much mortgage and so I need this certain appraisal number. That's not the way it works. It did work something like that back before 2008. But today, I can't contact the appraiser directly. For that purpose, I can only order an appraisal through an appraisal management company. It's a third-party company. I'm going to tell you a story later. I'll show you a slide at the very end about people who have wasted money by ordering their own appraisals. If you order the appraisal, it won't work for your mortgage. So don't waste your money doing that. Let the bank or the lender order that appraisal. We're going to review numbers after we get the appraisal back and make sure that this will all fit and work. If you want to do a home inspection, and you probably should, you should order that at some point after you've got an accepted offer. Sometimes there's some renegotiation because the appraisal comes in lower or different. Maybe the appraiser comes back and says that there's some repairs that need to be done before it can be accepted. You need to pick an insurance agent at some point. And I'd encourage you to interview a couple of insurance agents and actually have a call with them, a phone call, because you may get 3 insurance quotes back, and one quote is higher and one quote is significantly lower, and you think, well, let's go with the lower one, but the lower one might not be covering the contents of your house. It might not be covering the full value of your house. There might be some, and I'm not an insurance expert, so I'd let you talk to them, but I would encourage you have conversations about 2 or 3 insurance quotes and make sure you understand what you're getting, and you've got a good idea of why you're choosing the insurance you're choosing. At some point after we've gotten the appraisal back, we're going to order title. We're going to make sure the title search is ordered. You're going to pay for title insurance to make sure that the title is legit. For example, there may be a situation where you're buying a house and there's some debate about who owns it, and so you need to make sure that you have a clear title, and title insurance is going to protect you if for some reason 2 years down the road somebody that was supposed to have inherited that property, they were supposed to be on the will, they weren't on the will, something happened, they come back and they sue for ownership of that property, then your title insurance company, your title insurance is going to help pay them off or buy them out or whatever it takes to make sure that you still own that house. As the mortgage goes through the process, it's going to go from me, the originator who takes the original application. It's going to go to a setup coordinator who's going to put everything in the right buckets in the system, and then a processor is going to review it. A processor is going to send it off to the underwriter to get them to review certain parts, and the processor is going to collect any conditional pieces that the underwriter asks for. The underwriter's job is to make sure that this loan is good, and it can be funded by the funding agencies like Freddie Mac or Fannie Mae. The underwriter will typically ask for something that you haven't previously given. I'm going to first of all ask you for the things that I know you're going to need, and I have some debate with myself often. Should I ask you for things that you may not need, or should I ask you for everything that could possibly be needed? Or should I ask you for just what the automatic underwriting system comes back and says that you need? Sometimes I'm going to ask you for more because I suspect the underwriter will ask for more. Sometimes I'm going to ask you for the minimum, and then the processor is going to ask you for something additional, and the underwriter is going to ask you for something additional. And I go back and forth with the best way to handle that. So I want you to understand up front that sometimes the processors and underwriters ask you for additional documents and that can sometimes be aggravating. You can say, Josh, you asked me for these 4 things, and then the processor asked me for 2 things, and then the underwriter asked me for something additional. I know, I'm sorry. That can be frustrating. Sometimes I ask for a long list of 10 or 12 items, and it turns out we only needed 6. And so I think, well, maybe I should just ask for these 6 next times. And then that next time, the underwriter might ask for 2 or 3 of the things that I didn't ask for. And so I'm trying my best to make it as easy on you as possible. So up front, we can talk about, you want me to guess at everything that we might possibly need? or just ask you for the things that I know we'll need. And we can talk about that, and we can do it however you want. After we've gotten to the underwriter is going to give us final approval. After the underwriter gives us final approval, that's not clear to close yet. The closer has to look at the file and balance the file with the closing attorney and get everything balanced. And at that point, we're going to find out what amount of money you need to wire for your closing, for your cash to close. And typically with an attorney, you're going to need to either have a certified check or a wire. Today, it seems to be more popular to use a wire transfer. Let's talk a little bit about down payment versus cash to close. So your down payment is the percentage of the purchase price that you're putting down as you're paying up front and not borrowing the money. Let's use a small number. Let's say a $100,000 house. If you're putting down 5%, then $5,000 is your down payment, but you're still probably going to have closing costs of, let's just say $6,000. $6,000 is 6% of $100,000. Typically, closing costs are going to be a little less than 6%, but on a purchase price that low, it could be as high as $6,000 or 6%. Let's talk about fees for a minute. The fee that I currently charge as of July the 21st in 2022 is $1,295. That's $1,295 is the cost of Churchill Mortgage's services or my services to you. Some lenders out there charge as low as, some will claim that their fees are zero, and then some will charge $1,595, $1,895, $1,995 and up. Be careful, though, that you understand how to read a full loan estimate. When you get a full loan estimate, you may see that $995 that they told you they were going to charge you, but you also have to be aware of whether or not they charged you an origination point or discount points. So when you get a rate, when you ask for your interest rate, it's very important that you know if you're paying money to get that rate. So the fee and the rate costs or the rate discount points or origination points, those are sometimes talked about separately. So sometimes somebody will claim to you that their fees are low, let's say $995 or zero, but they're not mentioning the fact that they're charging you 1% in origination fees or 1% in discount points. So you got to understand all of that. I typically, when I quote rates, when you ask me to quote a rate for you, I quote a rate with 0 points. That's always my goal. Let me give you some guarantees. Number one, I'm going to guarantee that my rates are going to be competitive. If my rates are not competitive, I will change companies. I will not work for Churchill Mortgage anymore if I ever get to the point that I feel like my rates are not competitive. The second guarantee is I'll never hold you hostage in any way. If my rates, service, fees aren't pleasing to you, I'll give you everything I have. I'll never try to hold you to working with me. If there's anything that anytime you want out of doing business with me, I'll gladly let you out. I want you to feel like my only customer, but my family will eat if you choose to go elsewhere. I live below my means, so I don't want to take advantage of anyone. My third guarantee is I'll do everything I can to help you win the bid. When you get into a multiple offer situation, in other words, you're trying to buy a house and you're making an offer on a house, and 14 other people are making an offer on that same house, I'll do everything I can to help you win. I'll even go as far as making a shorter video than this and sending it to the seller, telling them how well qualified you are and how likely your loan is to close. And I'll even tell them if we can't close, we'll give them a $5,000 seller guarantee. There's some details to that, but we will do everything we can to help you win a house. Again, I talked a little bit about documents a minute ago. There's some things that I want you to be very careful not to do when you are buying a house. Once we get you pre-qualified, pre-approved, here are some things that you need to be very careful not to do. And actually, I think I'm going to make this video in 2 parts because we're already at 15 minutes and we're just kind of in the beginning. 6 things I want you to not do. Number 1, don't change jobs or companies while in process to buy a home. All major life changes need to happen after closing. If this does happen, if you have a client, let's say that you do have to change jobs in the middle of a process, we need to talk about that and figure out the best way to handle that. Don't open or close any new accounts. Don't apply for a credit card. Don't apply for a line of credit. Don't take out a new student loan. Don't even change your cell phone plans in such a way that they're going to check your credit. If you're changing cell phone plans, they probably are going to run your credit. So don't do that. Don't try to, you're trying to buy a primary residence. Don't also try to buy an investment property. If you want to buy 2 properties at the same time, make sure you and I are talking about that before you get started. Don't even buy something off of television if they ask you for a social security number. For example, let's say that an extra piece of exercise equipment is advertised on the TV. And you think, all right, that's not bad. It's only $60 a month. I can buy that iFit or that Peloton or whatever. Don't do it. Don't do it until after closing. That will impact your debt to income ratio. We'll talk about what DTI is probably in the next video. Also, don't deposit any outside monies outside of your typical payroll. You say, Josh, I'm going to have a yard sale because I want some extra funds in my bank, and I just had a yard sale and I got $1,500 from all this junk I sold in my front yard. I can't deposit that in my bank. You shouldn't. Don't do it. You're going to have to. We're going to look at your bank statements. It's going to be a challenge. We're going to have to document where that money came from, and when it's a yard sale, it's going to be a pain in the butt to track down every person that gave you a quarter. So don't make any unusual deposits. If you are, you're dealing, you're dealing essential oils in the backyard, don't deposit that money into your bank account. It's just going to confuse things. Don't co-sign for anybody. You're in the middle of a mortgage and you got pre-approved, pre-qualified, and you're so excited because you can buy this big house and you've got great pre-approval status. And somebody goes, oh, that's great, you're pre-approved. Can you co-sign for me? Don't do it, not now. We can't. That will mess up your loan. It will really make a problem. I've had people literally miss payments after they were pre-approved. Don't miss payments. Don't miss your credit card payment. Don't forget that you bought something from with your Old Navy card down at the cheap clothing store. I shouldn't say that. I like Old Navy clothes. Don't buy your appliances on credit before closing. Don't say, oh, I'm going to buy new furniture. Don't do any of that before closing. That's some don'ts. That's some big don'ts. Don't do those things. Okay. And absolutely, positively, whatever you do, car payments are the absolute most detrimental thing to Americans' finance. I sincerely believe that I can't pinpoint anything that is more detrimental to people's ability to buy a house than buying a car on payments. You say, Josh, it's America. We all buy cars on payments. Everybody has to pay for their car by monthly payment. That's just the way it is. No, it's not. Don't do it. Stop. Buy your house first. I can't think of anything more insane, there's not a bigger mistake. If you get a car on payments before you get a mortgage, before you're a homeowner, you are making a mistake. Now, if you come to me and you've got a car payment, don't be afraid to come to me because you've already got a car payment. You've got a car before you watch this video. I'm not going to mock you. I'm not going to give you a hard time. I'm not going to fuss at you. I'm just going to tell you how it impacts your debt to income, and we're going to work around it. We're going to do everything we can to help you buy as good of a house as possible in spite of that car payment. But if you haven't bought a car yet, don't get a car payment. Don't get a car payment until after you buy a house. Okay, that's my soapbox. I'll step off of it. And I'm going to post this video, and I'll come back for video 2. Oh, let's see here. I've got so much to talk about, but, oh, there we go. I just need to end with this slide. So there you go. There's my NMLS. Oh, my NMLS is not there. So I really need to end with a slide that has my NMLS. My NMLS is 205-8562. 205-8562. And there it is, 205-8562. That's who I am. That's my information. If you need me, call me, 828-238-2682. 828-238-2682.